Indie housing market. Get the latest insights right here.
Welcome back to Indie Housing Market. I'm Kyle Morris with Morris Property Group and FC Tucker.
I'm Shelly Walters with the Shelly Walters Realty Group and FC Tucker.
And Justin Griffith with Keller Williams, Indy Metro Northeast.
Dude, we got the band back together,
He's
dude.
back.
This is awesome, dude.
Good to see y'all.
I love it.
It's been a minute.
It has been. Not for lack of trying. We've had some scheduling issues here. Even this, like we ended up pushing it back a little bit today. Man, it's just good to have you on here. You've got commercial experience as well. But I'm touching the microphone. I'm sorry. I get yelled at for all these things. Anyway, so to me, like, just to get your pulse on the market, man. Like, I mean, this is how we all started this in the first place, was just the three of us kind of kicking this around. And, like, I've become a better agent because of this podcast and, like, the due diligence that we have to do on the stats. I'm sure you still see results from it in the way we look at stuff.
Do you still do stats?
I do when I'm getting listings. So if I have a client that's going to go to the market, I'll pull up, hey, this is kind of what we're looking at. And it really does help sell your listings. So it's if you know like a full grasp of what's going on, I think that does offer a big benefit to your clients.
It does. I think more than anything, what I like is that it allows me to set a proper expectation, right? And I think these days agents go in there uneducated and they overpromise, a lot.
Why is my house not sold? Why is my house not sold? Yeah.
Last year,
because you told me it was going to sell.
Yeah. Last year in particular, it helped me a ton because agents were missing the mark so bad when the market pivoted in May, and so we were talking a lot about that actually before we got on camera, because the market is like super intense right now, super intense, and every agent I talk to, they're kind of feeling that, except for the ones who are kind of like not super busy at the beginning, who are more seasonal. And so they're like, like they don't realize like it's insanely, like it's really, really quick out there right now. It's multiple offers, it's competitive offers. And so I think agents who aren't doing a lot don't know what the market really is like right now. But the three, for sure, you and I have our concerns right now. And I was talking to a loan officer a week ago, and we were just talking like a conversation about how the pulse of the market. And I was like, man, it is super intense. And I said, but I am very concerned, right? I was like, because this is how it was last year, right? And it started even later. So like it started in February, right? Last year. This year it started in January.
Yep. And
in third week of May, like it just fell out, right? And so I'm like, since it started earlier, does that happen in April this year? Does it not happen at all? And you would have thought when I was talking to, like, first of all, like I even told my friend, I was like, quit selling me, just so you know. Like I'm a professional, I'm in the industry.
I see what's happening. Yes.
I see what's happening, and like I'm kind of, because an LO is a loan officer is much different, because they're looking at like applications and all this other stuff, and I'm like, but I'm having the conversations with people when they're not doing things and they are doing things. And like I'm talking to people months before they ever even apply for a loan application and stuff like that. So I just feel like we have a slightly different read on it. And I can't always be as optimistic as a loan officer, because I'm the guy who puts a house on the market and has to be able to explain why it's not selling, right? And
Correct.
So we have a ton of listings that are going on the market in the next like 45 days. And then I'll talk to some other agents, and they're kind of in some similar situations. I'm like, man, this is a lot of inventory that's about to hit the market. And so I'll talk to a different agent or a loan officer, and they'll say, oh, well, that's awesome because I have buyers, but I actually don't see a ton of buyers. I'm not getting the phone calls from buyers the same way, man.
Not at all. No, and open houses do have like a lot less traffic. We used to get quite a bit of traffic, or even nosy neighbors, and it's like you're not even seeing nosy neighbors now. They're like, I can't afford anything right now.
But the ones that are in the market, they're all competitive and they're buying, and so it's really this weird kind of feeling. And so like I talked about it last week. I was like, I don't have enough data, but like something just feels weird. And then everything happened in the Middle East, and then like rates like went from like 5.9 to like 6.5, 7 at one point, then back down. Like we were trying to track down rates today. It doesn't matter, by the time this goes on, they'll be different. And so like I have some real like concerns. I'm not trying to project. I'm trying to prepare. Like where are we at in 60 days? And I just don't know, next thing I know, if I end up with all this inventory on the market and buyers pull back because interest rates went up, or people are concerned because of what's going on in the global economy or inflation or like the job reports, buyers stop buying and there's a bunch on the market,
prices
start dropping
Yep.
because agents didn't prepare their sellers correctly for the market. And then what happened last year is houses started sitting for 60 days and people were afraid because, of the seasonal sales cycle. They're like, well, we got to be done by end of summer. So so people just started cascading prices. And the worst part was like no data suggested a change in price, improved showings, improved offers, none of that. And that's my concern already. I just hope it doesn't happen. Like that was the kind of the thing, but like there's some markers here that are kind of behind.
Like just so much uncertainty just in the world economy right now, and it's making people hesitant to spend. They're feeling pressure at the pump. They're feeling pressure like day-to-day goods. Especially when you got someone that's a first-time home buyer that, they might have been pre-approved for $300,000 2-3 years ago, and now it's like $200,000 because of interest rates, and then it's like their costs. So it's really limiting.
They need to be careful with their pre-approvals right now, because if they are pre-approved,
it could change.
2 weeks ago, if these rates, they jumped to almost 7, now they're coming down to, they're so volatile right now that those pre-approvals are, if they're in any way, on the edge, we all need to be very careful as a buyer's agent to be showing houses. But, if they have a pre-approval that's, we need to know what those rates were taken from and be akin to the fact that they may be
it could be hundreds of dollars a month,
a lot
more
different.
Yeah.
So that pre-approval, as they're supposed to be, they're supposed to be good for how long? Like 3 months or whatever. And now
days,
maybe
now we're going to go to 3-week pre-approvals.
Yeah.
Hey, we need that rate.
Well, and you're going to tell people lock it. You know what I mean? Like you got to lock your rate.
Don't try to shop it. Yeah.
Yeah. And like, I don't know how it's going to play out, man. Like, I hope I'm wrong. But, gold shot up like last month. And now it's tanking,
Which doesn't make sense.
Makes no sense,
Nothing
right?
makes sense right now.
Yeah, up is down, left is right. You know what I mean? Like, and so when people are asking me, like, I'm like, this is the conversations I'm having with people, and I'm like, I think everybody's giving information based off of like a month ago, and like that's fine, but
it's not a month ago anymore.
Even historical data, like you can't even revert to a historical data because this has never happened. Like all of the things that are happening at one time, I feel like there's no sense of reprieve. There's nothing that's like, hey, we're going to calm tensions, like we're just trying to build this up. And it's like every day it's something new, and it's really taking its toll on people, I think.
I think the thing that's interesting too is if you look at, you were talking about there are multiple offers out there. Yeah. The market has sped up, but only in price points that are higher is what I'm seeing.
Or communities,
yeah. So under 400, harder, because that's our first-time home buyers or people that are very, susceptible to a lower interest rate being better for them. And if it goes higher, then they pull back. So my friend just listed one and sold one with multiple offers at 1.9. I was in a multiple offer situation at 1.7. It just seems like those are people that aren't as tied to the financial issues as these ones under 500. So your listings, if they're in a lower, they're probably going to be a lot less easy to sell if we really start to come into this issue more and more.
Yeah. Throw out like a 220 perfect house and people are, like it's different. I've got one I'm listing this week that needs like some sweat equity, and I'm like, this is a great opportunity for somebody, but yes, I don't know. And I'm not trying to gaslight people here or anything like that. Like, we're just here to be honest with what we're seeing and what we're feeling. And, I know a lot of agents listen to this, and be careful, I guess, is what I would say, because if you're not careful and you're not setting the right expectations, and that's what's crazy, is like we're like right at the start of the spring market. And so ordinarily we'd be like, this is the time, right? And like, shoot, this is what I've told people December. I was like, hey, let's take off the market and we'll list for that. And, I'm kind of like, it looks good, but I have concerns, like that's kind of what I'm saying to people right now. And if you don't have that proper expectation, if you're on the market at 60 days, mid-June, you absolutely are going to be having uncomfortable conversations because you didn't set the right expectation up front. And your only lever, because you're uncomfortable with the conversations and misled on accident through like lack of education or awareness or whatever it is drop price. Mm-hmm. And then that becomes a market condition and influences other people's behaviors.
Yeah, then neighbors start dropping their prices, then it's a race to the bottom. It's...
Yeah. I have one in Shelbyville I'm going to list, and there's 2 houses on the same street. And I called one of the agents. I was like, hey, what kind of traffic are you getting on this, right? Because I was like a week out. And there's 2 sitting there. And I'm like, man, like she was priced correctly. And then this other one came on and undercut them by like $15K. And I'm like, man, like what is going on here? And they're like, so then they dropped price because the other one. And when I was looking at it, I was like, I tried to call the other agent. I was like, hey, did you misprice it? Were they already gone? Like, you want to get some information as to like why there's such a massive price difference. And I can't even get the other agent to call me back. Like, it doesn't matter to a certain extent, but I'm like, what's going on here? You know, it's just, it's a thing. And I don't know. It's all the conversation, you know, we're a 3 to 4 week process to list a house. And the conversations I was having at the beginning of the month to prepare people
have already changed.
It's starting to.
Yeah.
It's starting to. Yeah. I was like, oh, it's gonna be great. The market's super busy, and I'm like, well, so about that, you know, like, pretty sure, you know. But what do you do? Like when you start talking like that, you know, I think agents are concerned of like, you're coming to me for confidence, and all of a sudden I'm not portraying confidence. Like, well, confidence is that I can be honest with you, you know, regardless of what it is, you know. I hate the idea that I can promise something by any means.
Well, we never can in this business. My goodness.
Yeah. So what are you seeing though out there, especially because you tend to do? I mean, you're messing with commercials, so I'm curious to see how commercials responding versus res.
I mean, they're also being affected by the economy, and it's office space is a thing right now that people are starting to do away with, and it's you know, yeah.
Wow.
It's just there's no rhyme or I mean, there is rhyme or reason. It's if companies aren't making money and they're trying to downsize, they're not renewing leases.
Yeah.
A lot of the commercial people have mortgages that are coming due right now. So they got those low rates and they're having to refinance. The rates are almost double of what they had locked in.
Goodness.
So what do you do to your tenants that's paying, say you're paying $4,000 a month, your interest rate doubled, so now you got to get 6 to 7 out of them?
Yeah.
They're not going to stay. They're going to go somewhere else. And I think the office space is still going to continue to be an issue. If I know right now there's people doing conversions. I don't know if we have too much of that going on right now, but for condos. But then you're going to have buyers for condos.
I heard
we have an abundance of apartments and condos.
Do we
going
have
up
enough
around.
of those yet?
Yeah.
No.
I heard a number over the weekend. I can't remember who I was talking to about it now, and they were telling me. It was Sunday actually. This was with my buddy who used to own some pizza places, and we were talking about how much it is retail square foot right now, and it was a lot. I want to say it was like 50 or something.
It's all really location dependent,
Correct,
but it's not. Yeah, nothing's getting more efficient or
and it
more
used to
cheaper.
be like 10, 12. You know what I mean? Because I went and ate at a place that this is a shout out. I went to Vicious Biscuit over the weekend, and
I've not been there.
oh my gosh, it's
Pretty
amazing.
solid.
It's amazing.
Where is this and what is this?
It's like around 103rd in like Cumberland area, and it's new, but it's new retail space, right? And there's not like a major access road off of there. I mean, there's that new exit off of like 106 or whatever right there, but there's all this new retail, and I was like, I wonder if it's cheaper because it's all new and there's no major anchor there. And my buddy's like, no, it's actually tends to be more expensive, even though it's less traffic. But because I was like, I bet this place prints money because they had a line out the door. It was absolutely amazing. I mean,
It's only biscuits?
Oh no, it's just breakfast food, but it's kind of like ran like a McAllister's, and it's biscuits and gravy and omelets and like I mean I got like 2 meals plus. I mean I got beignets, I got shrimp and grits, I got pimento cheese grits, I got
Who can spend like $30 or $40 going through Burger King
yeah, it was amazing
for one person.
I had to take a 2-hour nap afterwards. It was so
Sounds
long.
like it. You had like your
so
own
good.
smorgasbord
I
for
did,
breakfast.
But I mean, literally, I cannot tell you the last time I went to a restaurant like that, and there was a line out the door to get in, and people were like, "Yep, worth the wait." And I'm like, "This is amazing."
Good to know. Yeah.
So I highly recommend.
Sounds like
going
they
there.
need a second location already.
So
Go
it is a
knock on their
chain.
door, Justin.
Yeah, no kidding.
Yeah,
He's making notes
like
right
write
here.
it down. But I was just curious because I was like, man, I bet they're printing money, and because they're so busy, and historically. Restaurants are not necessarily a moneymaker. They're just not.
Yeah.
Like that you see even a major, like really successful one, like they can get 5 years, 10 years, and then it like just kind of tanks and loses money. It's really like Matt the Millers. I mean, that was
That's
did great
why
forever,
a lot of them are closing.
Yeah.
Yeah.
A lot.
There's just been so many restaurants that I've seen that do really, really well, and then like, what do they just fall out of favor? I guess I don't know how.
I mean, there's some. I also think too. Like, I mean, if you look in Broad Ripple, I just saw OPTs close recently. I don't know
Yes.
what the backstory was behind that, but it's. I mean, if you look at what the rents have done there, eventually,
Well,
you
yeah, that
can't
was
sell
all-
enough drinks or get enough people into
To make profit.
make a profit and live comfortably.
Well, you look at all of the things like that. You're saying all the lower interest or the lower rates. These are all the mom and pop restaurants, or mom and pop stores, mom and pop everything that could just go into these smaller and do their business. Well, as those rates continue to go up, like you said, as the landlords have to raise it, that's who we're going to keep losing. Is
Yeah.
all the small businesses, I don't know.
It's almost like a
it's
tale
concerning.
of two economies. So, like, I was out at a restaurant recently, actually last Wednesday. So, I remember when I was younger, on a Wednesday night, you would see younger people in the restaurants, like drinking, having a good time, and they
Yeah.
would close at like 11 o'clock. Most of them close at 9 o'clock
Yeah.
now, and they're dead from 7 to 9. It's like you get the initial rush, and then it just dies down. I think a lot of people, like on the lower end, are just not having that disposable income.
I was going to say the income is not there.
Yeah, so
Yeah,
like
I
when you
see
talk about the
gas
higher
stations.
prices, yeah.
Gas stations close earlier now too.
It's just nobody's out late, and I think it's really a tale of two economies right now. Like you're talking about multiple offers on the higher prices, but then the lower homes are just sitting, and it's like a lot of people feel like I got to settle right now because I got to buy less because these rates are going up, or
So that's what's interesting. So we did talk about this, like, oh man, I want to say like in the fall, something very similar, that there were kind of two markets, because luxury market did perform very, very well last year. And
so did the stock market. I
Correct.
think it's like a direct tie.
I agree. So like, I'm a big believer, like the whole like cash is king is bullshit, right? As long as the check clears and you've got a good loan officer and blah, 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 like cash is not king anymore.
Yep.
But that's incorrect. It's dependent on the economy. So like last summer and like right now, cash is king, actually. You know,
Very much so.
Yeah, and so like I think it's a misnomer. It's not that cash is king. It can be at times, and specifically when stock market is doing well but cost of living is high, like people who have more money, like they're going to have they can take loans out easier, and like they don't have to take necessarily as much liquidity, and so all of a sudden their assets do actually get them further, right? And they have less competition as well.
1,000%.
Yep. It's interesting. I don't know. I don't know what to make of it. I really don't. I'm really happy it was 80 degrees on my birthday.
It was 83, then it was 33 in the same day.
I know.
Yeah.
And it's going to happen again on Thursday, they say. So,
What? Which one? 80 or snow? Which one?
both.
I think we're getting,
Both,
I think we're
again,
getting flurries
83 to
again.
33.
I hate both of you right now. That sounds horrible.
We've just brought you all kinds of news today, haven't we?
At least you had good weather for your birthday. I mean, that's
did.
like, I got a November birthday. That's few and far between.
Yeah, I'm
so
January. Never.
I'm jealous.
Somebody gave me a hard time too because I ate so much food. I had to go take a nap, right? And they're like, "It's too nice out. You can't take a nap." And I was like, first of all, I'm gonna nap on my patio, but second of all, like it's about to be nice out every day. I'll be okay.
Yes,
I work a lot outside. Like I don't have to go just enjoy this one day. Like it's not gonna be a thing. So
Yeah.
I don't know though. I do have my concerns, kind of just about the market and.
Well,
I don't know.
it's going to be, as you always say, it's going to be interesting. But the thing is just agents need to stay up with a lot right now, paying attention to what the market's doing, paying attention to the rates, what's doing, paying attention to the current buyers, pre-approvals. And as a listing agent, you need to pay attention to the pre-approval you receive. Because you just never, it's just so up and down right now. And
verify that they locked in. Be like, hey, we got this offer accepted. Is this locked in? You kind of want to do your due diligence on that end as well.
Yeah.
I call loan officers, and sometimes they don't like my phone call. And I'm like, I'm just asking how good.
I'm being thorough for my clients.
Right.
Yeah.
I'm just trying to make sure we're not falling apart the second you sign the dotted line here. So I don't know.
I had one. So I'm not a big believer in that a lot of times because I know that a loan officer is going to be like, hey, we're good to go. They're not going to answer it kind of. I like the idea of, are we clear to close? Are we in underwriting? Like, I like all of that stuff. But I had one where the client was looking at switching financing in the middle of the deal. And I was like, oh my gosh, this is
Why?
just giving me so much anxiety.
Yeah.
Well, I'm
And I was like,
seeing
maybe we
that.
can pull this off. And then like the agent reached out and was like, hey, I just want to see if we're clear to close. I was like, so about that. But
Yeah.
we got it all locked in.
I'm
It's no big
seeing
deal,
that right now. I've got 3 buyers that are really watching these rates. And the first thing they do is they see the rates change, so they want to start calling different loan officers. I'm like, there's so much that goes into it besides the rate. And it also depends on the rate is when you receive it today. Tomorrow's rate could be different. So if you call a different loan officer tomorrow, the rate's lower. That sounds like they're better, but no, it's lower because everybody's lower today. But I am seeing a lot of people, and I've heard more people in this past 2 weeks say, I'm not going anywhere because I've got the 3.9. I mean, we've been talking about that forever, but that's come up a lot in conversations for them. They're like, nowhere. I'm not doing it. No, they're getting close to 7. I'm staying here.
What I am seeing a lot of, though, I started last year. I'm seeing more of it this year so far, is baby boomers who no longer have the choice of the decision. Yeah. I am seeing that, where the kids are stepping in and they're like, this is just too much house, mom and dad, and like this just isn't going to work. And you know, your finances are fine, and let's talk to a financial advisor and a loan officer. I'm running into a little bit more of baby boomers who are, they have to be contingent because so much of the money is wrapped up into this like house that's usually low interest rate or a lot of times paid off is the real thing. And they're like, well, we have, you know, $600,000, $700,000, $800,000, but it's all in this house. And so it will be interesting to see if baby boomers are getting beat out by millennials because they have to be contingent offers.
It's a good theory. Yeah, I like that.
Yeah, because they're not used to that, you know. And, I mean, you know, like my dad, if he was still here, my dad would have just been so stubborn. He would have been like, I'm not doing that.
Yeah.
Well,
I don't know what to tell you, Dad. You know,
they also, for them to see that they're going to sell the house that's paid off, and have to go spend $600 or $700 to replace that house when they're trying to start watching money more and more. Not saying I was in the age group. There's no reason for them to move if the house is still working for them. So that's where we have the inventory setting as well that's not being released, is they don't want to triple the cost of a house just to move to a smaller one. It's like, I'm fine right here.
Well, I've had a lot of success with downsizing into new construction, specifically like
the rates have been great. Like they are doing great with the rates.
The builders, builders are doing everything right now to get a buyer.
4.5% or 5%, and you're
5,000
6 something. I mean, that's a big
bonuses
difference.
to agents.
And they've gotten really smart on building ranches that are just automatically low threshold. And so like you don't even have to be, you know, in an Epcon or what's the other one? Or Del Webb community or anything like that. Like you could go into a regular new construction neighborhood. D.R. Horton in particular, I've had a lot of luck with because they've got a lot of like, I don't know, not handicap accessible, but handicap friendly, I guess, floor plans. And so I have seen, the price isn't as high. It's definitely higher than they want to be for what they're expecting. You know, you are talking in the 3s or whatever, but they're being able to get their money out of their house, get it. So now all of a sudden they don't have to worry about a roof. They don't have to worry about the mechanicals for a while. They don't have to worry about the appliances for 2 years. Like they have these warranties and guarantees. And like I've had some luck with that. And so like I hope anybody who's listening, you know, like to your point, you know, rates are better, like they're getting a lot of incentives. And so, but the thing that you run into the most and the biggest headache I've had is, well, I don't want to go into a cookie cutter neighborhood. Like, I don't have a lot of options there. Mm-hmm. That's the harder part.
They're all in farm fields, so there's no trees. It's just flat land, neighbor.
Yeah, because, well, you got to think a lot of these people have been in houses 20 and 30 years. And like as production has changed over the years, lot lines have changed, presentation has changed, you know, builders have to make more money, what the consumer want looks different, you know, so, you know.
Lot sizes are crazy. I feel like they're just like
0.25, 0.3.
Yeah. Now you can be at like 0.08. It's like, hey,
right.
I could reach out and like, let me flip those pancakes for my neighbor real quick. And,
have you seen, okay, so I still got to figure this out and I haven't done it yet. On 146th Street across from the new car wash over at River Road and 146th.
Did you say wash with an R in it?
I did. Sorry.
Okay, I just want to make sure.
I am from Indiana.
Yeah, I didn't want to let that slide there, but go ahead.
I know. I get in trouble.
Wash. The new car wash off of 146th.
Anyway, across the street from there is this new housing development, and it looks like barracks. I can't figure out what it is. And it's on the south side of 146th Street, and it's west of Crew.
Okay, yeah.
And it's where all the big, huge townhomes and everything, that big.
By the Monon Right there?
No.
Where you at?
It's just west of River Road,
Oh, Western River. Okay.
Yeah.
Yeah.
about 3 lights to, and it's on the south side. And these houses, they're little white houses, but they're literally, you could reach out of your window and touch the house next door to you. And they're cattywampus to each other. It's the weirdest. They look like army barracks, and I'm trying to figure out what that is.
That's what,
Nobody
Gramercy,
knows.
Gramercy is crazy.
That
now.
is very close.
Yeah.
Some of those awning, like the soffits will hang out over the other house. I'm like, how is this? Like, I mean,
How
it's
are we
like
doing-
it's really close. Like,
Just closed one today.
yeah.
In
that-
Gramercy?
Yeah, they're the real close houses. But
And they're awesome houses. It's
They
just
are.
They're beautiful.
It's very intimate.
Beautiful.
You're very
Yeah.
intimate over there.
yeah.
Yep.
That used to be a golf course. I played that golf course.
Oh well,
back in the
you're gonna
day.
start sounding old.
I am
I
old.
remember when. Well, I live in a neighborhood that was all woods, and it's sad that they just plowed it all.
I like your neighborhood though. I like both of your guys' neighborhoods, but
Yeah, your neighborhood's really. They just said that I saw the last one was sold.
Mm-hmm.
Yep.
Finally.
really,
That took a while.
yeah.
It did. Yeah.
Why? Do you know?
Was it because of the gas line? I mean, I remember that one section people didn't like the gas line.
No, it's. I mean, really, it just like the economy just kind of slowed down a little
Oh,
bit.
yeah,
I mean,
okay.
they weren't really offering any kind of incentives for interest rates or build, and the lots got pretty expensive in there too. So I think just slowly priced itself. You know, it took a while.
Which is what's interesting because we had the gentleman on from, oh goodness, building Holiday and all of that stuff, right? Like a couple of weeks ago. And, we're talking about some pretty insane prices.
Monster houses.
But at the same time, like that goes back to the two markets that we're in, right? Like that market is like so different.
It is very strange. I mean, first of all, the Hamilton County area is kind of a price point that's just expected, I guess. But when you're selling, I mean, Marion County, some of the Fisher's properties that are, under 3 and under 4, just watching them sit and watching these over $1 million multiple offers, to me, it's just really odd right now.
It
Really
is.
odd.
I'm curious. I mean, we used to have you come and do a bunch of the stats for downtown, and downtown I've seen do really, really well. But the thing that I always thought was really interesting downtown is the condo market downtown. Because I remember back when we first started all of this, like that market just sat and
Yep.
sat and sat. And part of it is because the dues are so expensive.
Yeah, $700, $800 a month, like
Insane. Yeah.
to take care of what yard? I mean,
Well, not just that, and amenities that don't necessarily aren't reflected.
To add a value. Yeah. Just like.
Yeah, I don't
great.
want that. I don't need that either.
And it
How
almost
is-
like limits people from downsizing into it because they're on fixed income, right?
Mm-hmm.
And it's like, hey, well, I own this outright and it's great and it's low maintenance, but then I have $700 a month I have to come up with.
I think like the downtown condo market's kind of interesting because you have like the young professionals that
Yeah.
want to be in the condos, but also the empty nesters. They want to be in a busy environment. The kids are out of the house. There's not
Vibrant,
really
yeah.
like people around that they're going to work and stuff, and they kind of want to walk to restaurants and to the gym. And I've been seeing a lot of that too.
Yeah.
So
Yep.
is the Indy market doing Indianapolis downtown market?
I mean, I think we're going to start dealing with a supply situation as well. There's quite a bit sitting on the market right now, and I just think that that's going to possibly exacerbate like a little bit more this summer. But
It is.
it's not all doom and gloom. Like there's definitely pockets that homes are going quick, that you're getting multiple offers and things of that nature. But it is weird. These price points are just the one that used to be the busiest. You'd always say like, oh, anything up to 350, those move quickly. Once you get up over 5, 6, like, that would be like a little bit slower and then
Right.
just,
Right.
on and on. And now it's like
Exponentially.
complete opposite.
It
like
is weird.
complete opposite.
Yeah.
That is weird.
Well, I don't know. It'll be interesting. Maybe we'll have you on here in a couple months, and we'll kind of be like, "I told you so," or like,
Yeah, we
like,
could do
see
an
where it was.
update and see what happened. Yeah,
That's
yeah.
what we should do. We should like kind of like, hey, what we did right,
Mark
what
this
we did
episode.
wrong. Yeah. So, but I'm just, man, it's good to have you back on. I know you
appreciate
gotta get out of here, but man, I don't know. Like I love like when the three of us get back together because it's kind of how we all started, and like we just kind of all fumbled our way through it, and
Figured it out.
Don't tell
we
Tony
did.
that.
Yeah. And Tony is Tony's idea, man. Shout out to Tony. I
Shout
love
out Tony.
Yeah,
Well,
yeah.
give everybody your information. I know you have to leave. We'll do our stats after you get out. And,
Yep. Justin Griffith, Keller Williams, Indy Metro Northeast. Phone number is 317-507-5599. And if you just Google Indianapolis Realtor Justin, I'm pretty easy to find. So
Sweet.
Thank
All
you
right.
so
See you later,
much.
buddy.
so much.
Yeah,
Good
yeah.
seeing you.
So I'll jump into the stats real quick. We got spring breaks coming up, so it'll be interesting.
Some are already happening.
I'm on spring McCordsville, Mount Vernon. We're already on spring break. This is our second week. We started last week, and then
You have 2 weeks?
yeah, we get 2 weeks. We did college visits for my son. We did Cincy yesterday, which I love Cincinnati. And then we got Bloomington IU tomorrow. So you'll never believe this. So when we were down there, I really like the Cincinnati campus, and he's like, I think I'm really gonna like Bloomington better, but I may go here just because like I'm forcing Bloomington on him. And so like
You need to stop. Just yeah. Then
So
all
I
of a sudden-
did, and so I told him, I was like, you know what, Mike, if you want to go check out Purdue, we'll go check out Purdue. I even told him that, which is a big step for me. Big step for me.
You know what I noticed when I went to Purdue is the IU people.
I like
were
Purdue, by the
So anti-Purdue, it was so like crazy. Purdue people could care less. They really could.
Yep.
IU cares too much.
So
I
here's
don't
the-
understand it.
So I that's interesting. I think it's a generational thing because I agree. When I was down there, for sure, like IU was really big about it, right? And my friends at Purdue, they did not care, right? However, I feel like at a certain point, it pivoted, and the IU people of my generation quit caring, and the Purdue people of my generation
Interesting.
started caring. And I think it's because IU kind of became a little irrelevant when it comes to sports there for a little while, and Purdue did become relevant. It's really hard to like kind of like pump your chest when like you suck. Yeah, I'm just being
What's going to
honest.
be funny is Purdue's doing very well in basketball. What if they become the national champs and IU was the national champs in football?
I would
How
love
fun
it.
would that be?
So I've pulled for Purdue. I got a buddy who's a big Purdue fan, and I've pulled for Purdue the past couple of years. When it's a tournament, I'm just pro Indiana sports in general.
I watched
Yeah,
IU football the whole time. I was rooting for them 100%. But like I said, when I went to Purdue, I could care less about IU. All my kids went to IU, so that was a whole different thing. The kids that did go to college, I should say. And then people at Purdue were like, just first of all, Purdue people were like, we're the students. They're the partiers.
Heck yeah, yeah. What's wrong with that? But nowadays, like I feel like the Purdue people are like, I'm like, man, if this is what I sounded like, why didn't somebody slap me? You know what I mean? Because they're like almost like too aggressive. But whatever. I love my Purdue people, and I would be fine with my son going
It's
to
a good
to
school.
any college.
You can't say no. You can't say anything bad about either one.
Proud of him. That's all I know. All right. So in Fishers, let's see. There's 160 on the market. I lost a little bit of inventory. 40 went on the market, anywhere from 209 to 2.3. 24 is still active. 16 pended, but 31 actually pended last week. Now my days on market in Fishers is just tanking. It is currently averages 26 and the median is 6. Like
Well, I wanna
Fishers
say,
is flying
tanking
right now.
means it's getting bad.
Yeah. It's super low.
It's going
Yeah, yeah.
crazy down.
Yeah.
Yes. Same.
So the market's really aggressive. Now, also, Fishers and Hamilton Southeastern are about to go on spring break. So we'll see how that plays into it here in the next couple of weeks. So, and then in Noblesville, I actually picked up inventory in Noblesville. We have 174 on the market. 47 went on the market last week. 40 of them are still there, so only 7 pended within a 7-day period, but 25 actually pended. Anywhere from $65,000, which I like to see that number. Anywhere on the north side, it makes me really, really happy. All the way up to 1.4. Average days on market is 44, and the median is 17, and we have been kind of holding steady there for the past couple of weeks, which just means it's, I don't know, in my opinion, it's just kind of a good. It's a quick market, but it's not insane, and it's doing well.
At least it's not tanking and going up.
Correct. Yes.
So Carmel, Carmel's going fast. 42 hit the market. A total of 27 did pend of those, and 39 total pended. So we almost just lost our entire inventory. Average days on market's 26. Median is 4. So that was the same last week too. So these median of 4 of all those 39 that pended is, again, sell right away because it takes us a couple days to get them pended. So that Carmel's moving fast. And like we were talking about earlier, it's a different market in different towns as well as price points. Active 154 are currently still active, but their days on market are 91 with a median of 34. So there's a lot of stale activity out there too. 98 sold in the past 30 days. So an average day of 49 with a median of 16 for those 30 days. So we've cut our average down in half. So it is speeding up in Carmel. Westfield 32 hit the market, and that was less than last month or last week. 12 only of those pended, but 39 pended. We lost 7 in inventory there. So Westfield sped way up. Their average days on market was 38 with a median of 16. Last week was double that, 74 and 48. So the market is continuing to get better. There's 117 that sold in the past 30 days with an average of 60 and a median of 20. So again, Westfield's also getting half the days on market with 197 sitting right now at 86 and 47. Zionsville 10 hit the market, but 11 total pended. So they lost inventory there. A total of 6 of those 10 pended right away with a 32 average and 6 median for the past 7 days. There's 46 on the market in Carmel, but the average days on market for those are 127 and a median of 55. So a lot of stale inventory in Zionsville too. 30 sold in the past 30 days with an average days of 45 and 29. So they've come way down on their median from 29 to 6.
Not just, I can remember when, I want to say like November, maybe, Carmel was like 90 days.
Mm-hmm. They all were.
Yeah.
Well,
yeah.
they're 91 with the sitting activity. They're sitting houses.
I don't know. I don't know. I mean, the whole podcast is kind of about like, hey, it's really intense, but I have some concerns here, and I hope I'm wrong. I really do, but it's just something feels a little offish about it. I don't know what it is. I hope it's not just me projecting into the market by no means.
Well, we can all go just in and look and see. I mean, just not doing cities, but these are doing breakdown of 5 cities, right? And what we're feeling doesn't seem to be happening. Mm-hmm. We're seeing a lot of fast movement here. Actives, though, those ones sitting at 3 months, 4 months. Yeah. That's crazy. So the ones that are selling are the ones that are hitting
Nobody's
the market
going
right away.
after the stale houses,
No.
really. It's interesting.
Yeah, it's very strange because, again, it's 2 markets. The active homes that are sitting and the houses that are just hitting the market. They're either being marketed correctly. Here's what I think might be an issue, and this is where we've talked about it, is sellers and agents are sitting at the table and the sellers are telling them what they want out of their house. Mm-hmm. And I think they were doing it based on what was happening over a year ago. So you're looking at these ones that have been on the market 3 to 4 months. That's what they're setting. So they were talking at the table last October. So those people were looking at comps in maybe May, mm-hmm. February, March, and April of last year. Whereas the people that are hitting the market today that are selling in an average of 4 days, we're looking at comps for the past 3 months, and they didn't go much past December. And they're pricing against the correct numbers, whereas these active homes are priced from last May.
When it
and
was
they really need
before it fell apart.
Yeah, they really need to be looking at
people need to pay attention to
the
that
comps
right now a lot.
Yeah, absolutely.
It's hard. You just got to, make sure you do your due diligence. And, I think there's going to be agents out there that are going to put themselves in some tight situations because of it. So, but we'll see. We'll see how it all plays out. So.
Well, and like you said, we have some spring breaks coming up, so it's going to slow down. Period.
Yep, it will. So, well, if anybody wants to get a hold of me, I'm Kyle Morris with Morris Property Group and FC Tucker. My number is 317-649-5122.
I'm Shelly Walters with the Shelly Walters Realty Group and FC Tucker, 317-201-2601.